On this video, I'm going to show you the top 5 reasons why you keep getting declined when you apply for business funding. And I'm going to show you exactly how to fix it. If you're new to the channel, my name is Ariel Morel, and I'm a former bank VP that used to work for some of the biggest banks in the United States. And now I own a consulting company that helps entrepreneurs get access to capital. And if you want to learn how my company can help your company, then definitely check some of the links in the description. Now let's get started. Mistake number 1 is not knowing the bank that you're applying for data points. What are data points? Every bank has something called a credit box. Within the credit box, they have specific requirements to decide if you're going to get approved or not. Some of the things that you need to get approved might be your personal credit score, having a minimum credit requirements. You want to find that out directly from the banks. They have a minimum amount of time in business. How long has your business been established? They have an internal high-risk industry list. They have some certain industries that they do not want to lend to. And also they leverage to see how long you have been in a relationship with them. How do you fix it? Before you apply for anything at any bank, you should sit down with a business banking relationship manager or a branch manager and interview them about the specific requirements that they have for the loan product that you're trying to apply for. Whether it's a credit card, whether it's a business term loan, a business line of credit. Find out what the exact requirements are and then do your own due diligence to see if you qualify or you meet those minimum requirements so you don't waste a credit inquiry. Because the truth is, most entrepreneurs, they just go to any bank that they find. They go to some of the top banks in the United States that they don't really need you as a client. And they apply without knowing to see if they have a clean credit report at the personal level, business level. So again, learn how to interview the banks to extract those data points to see you meet the requirements so you can get that approval and increase your chances. Mistake number 2. Your business does not look like a business. So when you apply with a bank, they have an internal algorithm system that goes beyond a manual review, meaning that an algorithm is going to check to see if you qualify for a loan with them or not. And the main thing the algorithm is looking for is to see if your business has congruency. What is congruency? If you go and apply and you put address 123 Pennsylvania Avenue, and then the paperwork that you submit to get that approval shows a different business address. It might show a personal address, a virtual address, and you don't have that congruency. That might raise a red flag. So at a minimum, before you apply, your business should look like a business. So how do you make this happen? You should have congruency, making sure that all the information matches everywhere online. You should have some social media profiles. Yes, banks do go and check to see that what you say your business does actually matches with the stuff that you have online. They check for a business website. They check for a business phone number. They check for a business email. Not a mycorporatesolutions@gmail.com. They're trying to see your name at company email domain. So at a minimum, that's what you should be doing to make sure that your business is fundable. Mistake number 3, having bad personal credit. Yes, I get it. You're applying for business funding. You think that the business credit is everything that you're going to need to get that approval. Even though most banks for small businesses and unsecured products under $250,000 require for you to put a personal guarantee. Why? Are you not planning to pay the loan? That's one part. 2, they're going to rely on the personal character of the person applying for the business because the business does not have a perfect track record of paying in their obligation. So they want to see how you have managed personal debt at the personal level because historically, how you have managed personal debt is how you're going to manage business debt. So if you have been doing your research trying to figure out how to get approved, and you have seen these gurus talking about that you need a paydex score 80, a whole bunch of extra stuff that you have to get a net 30, net 60, and net 90 account. All of that stuff, when I used to work for the banks, we never asked for that. We never checked for that. My underwriters will never ask me for that. So you can trust somebody you saw online, or you can actually trust somebody that used to work for the industry. And I did millions of dollars worth of approvals without ever even knowing what a paydex score when I was working at the bank. So before you apply, make sure your personal credit profile is cleaned up, that you have at a minimum of 680. That's the average minimum credit score that you need with most banks. Some banks are lower. That you have no recent late payments. You have nothing negative, no collections, no bankruptcies, no charge of accounts. That you have a clean credit report, especially when you're a startup. And that's how you can qualify for really good business funding. And trust me, banks are willing to give you up to $250,000. And sometimes without checking any documentation or any business credit. We do these approvals all the time. Number 4 is applying to the wrong lenders. So you probably go to the same 2 to 3 banks. Most entrepreneurs, I need business funding. They're gonna go to whatever bank they saw that's on TV. They might go to Chase. They might go to Wells Fargo. Whatever bank is spending money on making sure that you know that they actually exist. They go to a bank that doesn't really need new deposits, small business accounts. They're looking for institutional banking. So because of that, they don't really have good products to give you some nice approvals to give you the capital that you actually need. Yet, There are over 4,566 FDIC insured banks and over 13,000 lenders that are looking for clients just like you that have a credit box that's a little bit bigger to help you get approved. So while the major banks, you need a 700 plus credit score, X amount of years in business, there are banks that are willing to lend you from day one when you have your LLC, up to 100 grand or maybe a little bit more. And there are also banks that, while this specific bank does not want to lend to a high-risk industry like real estate or construction, there are banks that specialize in just lending in that industry. So I get it. You're not going to have the time to go and figure out what is the best bank for your business. So you want to figure out how to find these banks. Definitely watch some of my other videos where I break down exactly how to unlock these community banks, these backyard banks, or check the link in the description to see that's something that can help you out down the journey. Because I get it. Nobody has the time to figure out what banks are lending. And trust me, banks are lending. And mistake number one, doing it alone with no actual strategy. If your strategy just relies on going to any bank, applying without knowing how much you're going to apply for, without knowing you have a properly set up business profile, without knowing to see if your personal credit is ready, without even knowing that bank is actually currently lending to non-members, is the main reason why most people get declined. Because again, they don't know what is the best bank for them. They don't know how to deal with their branch employees. They don't know how to elaborate and see why they need access to capital, or even they don't even know how much money to ask for and to see how much money they qualify for. So it's highly recommended that you work with a professional, with a business loan broker that knows exactly how to place you in the best position for you to get an approval. That, or just keep watching this channel. Like, I'm just here to help you out. As a former bank VP that used to work for the banks, I'm just giving you a lot of insider information. And as a bonus, here's one last mistake. The bonus mistake is applying with the wrong person at the bank. The difference that I have where I'm able to help a lot of people get approved is knowing that I have the right person at the bank to make sure that they approve my client. Not all business bankers are made the same, or even most people go into the branch, they say that they want business funding, they might end up talking to a teller or a personal banker that's not trained in the business funding world, and that doesn't even know the products that the bank offers. This employee might just want to be able to open a checking account so they could get credit and get paid their commission, or maybe the branch manager, they're super busy coaching employees, managing the branch, making sure their branches don't get robbed, making sure that they're actually helping employees grow, and then at the same time, they have a lot of sales pressure that they handle from above. Trust me, I used to work there. So it's not in their best case. So it's not in their best interest to make sure that you get that approval. They're just trying to survive. So having a key employee and a good employee that knows what they're doing is really important to make sure that you get that approval. So if you're making any of these mistakes, don't worry, it's actually fixable. And that is exactly why I created my Loan Hero community, to help entrepreneurs get access to capital and also show them how to profit from it. So if you want more business funding tips, make sure you like, share, and subscribe to this channel so I can keep making videos like this. So anyways, I'll see you in the next one.